Stock market cycles have always perplexed investors. At the bottom of markets, people tend to be bearish. At the tops of markets, people tend to be bullish. But the fundamental question of what drives things has always perplexed. It's pretty simple, but most people can't keep themselves to that simplicity. Cycles vary a little this time to that based on circumstances. But the driving feature is that once you've gotten to a point where the market's gotten ahead of itself and some bad things start to happen, the market will typically roll over slowly and go down gradually, pulling in the last greater fools into the market as they think it's their opportunity to get in for the next ride up. But then it finally moves down into a plunging downward phase. And when it moves into that plunging downward phase, everybody gets panicky. And at that point in time, because the market's always pre-pricing, I preach this over and over and over again, it's always pre-pricing a future that's out there someplace between 3 and about 30 months. And when you get to that panicky part, it pre-prices the near side of that. It pre-prices the fear of what's immediately ahead in the economic downturn that goes with that. And it can't hold on to that near term for too long. Soon reverts to the far end, which is pre-pricing out a couple of years into the future, past the recession. What drives the market fundamentally is the difference between expectations and realities. And that future reality a couple of years out is past the bad economic times that everyone's focused on at that moment in time, and the market keeps moving higher because it's pre-pricing that better future than the future that everyone in the short term created by the panic is myopically focused on. What drives the cycles is whether you're focused on the far side or the near side, but the market can't stay focused on the near side for too long. And then once it gets focused on the far side, it stays there for a good long time until you run into those bad things that pull it back down and create the cycle over and over and over again. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.